Can anybody see the sentiment on it? It's not good. It's unbelievably good. Now, it's good for bottom edges. You just don't see it as much. You don't see it as much because people take a little bit more care buying into bottom edges. They're slow to buy and they're fast to sell. That's the idea. They need to be fast to sell. Why? Because if the gamma catches, the market drops, right? You don't have the luxury of being slow to sell. Does everybody understand that? Bottom edges take a lot of time sometimes to build a value. But top edges can simply flip, and then it picks up gamma and it's gone. Picks up gamma and it's gone. Well, if I see the top edge forming, look at this value divergence, guys. This would have suggested that the S&P could have been trading probably somewhere around about 37.50s. Never mind 38.50s. Potentially another full point down. Probably a full point further to the downside here in terms of sentiment. So we've got to remember that these things are visible if we are willing to take a look at them on the bigger picture. So you can see in the background here, you can see this bottom edge took an eternity to really work away from this. It took a pop, it still never rallied, it took a pop, it did rally behind that big rally there, and the value was still divergent massively there when we came back down to retest in here. A perfect example of a big buying opportunity in those areas. And the takeaway from that buy trade was brutal. Absolutely brutal. So when we see these elements, we can't mistake what's going on a macro or a micro scale basis, guys. The supply line still looks really quite bearish overall, but we saw an improvement in volatility, and we'll touch on that in Classroom before we get into the cash open for very obvious reasons. We're coming into cash open, and it gives you a chance to have a look at it and think about it before it happens. Hold on 1 second.